What's up, guys? I welcome you in this wonderful video. There is something very interesting that I want to share with you, which I believe is gonna improve your trading, more especially if you are a price action trader. So I'm here opening this beautiful chart. It's USD ZAR. You see, when it comes to trading, we know that trading, it's all about trends, breakouts, and ranges. So the market is moving in a certain pattern. Let's say it is moving in a trend, and then it's gonna break out. For an example, in this case, it's gonna break. Okay, let me start there. It moved it down as a downtrend. It broke it. It entered into some kind of a range. It broke the range here, and it started going up. So it's all about a certain pattern, and then that pattern becomes broken. So I just want to highlight some few things that you need to pay attention into as a trader. So what traders usually do, or what I also used to do this, what I used to do is that I will observe a breakout, and then I will begin to act from that breakout. Let me make an example. Let's say here we can see that the market is moving up, and I can see that it broke down here. Now we can see here was our low, and here was our previous key level as well, which might act as a minor resistance. So the price broke this level here, and what traders will do is that they will start to sell immediately when the breakout happens. And there are a lot of things that we can point out to justify our entry. One can say that I observed that here there was a decrease in momentum, meaning we can see that here is an impulsive wave and then a corrective, and then the next impulsive wave was small. So we can use this as a justification that, okay, that's why I decided to sell here, because the next impulsive wave was smaller, meaning that the buyers were becoming weaker. And another justification is that here I can see this smaller high here, which might act as some kind of a retest or a next high, which can be compared to that one. And that's not the right case. You cannot compare this smaller high with that one. That's not how it works when it comes to analyzing with price action. You compare waves which are at the same magnitude, which are almost at the same size, which almost took the same time. You don't just compare a very small wave with a bigger wave. You can't compare this one green candle with these candles which are almost 5, which make up this impulsive wave. So I hope that is making sense. And one thing that I have to advise you guys when it comes to these scenarios is that never trade a breakout without a confirmation which is either a high or a low. What do I mean about that? Remember that an uptrend is made up of higher highs and higher lows. So as long as the market is moving in this flow, it is still an uptrend. And then a downtrend on the flip side is made of lower highs and lower lows. So as long as the market is moving in this scenario, it is controlled by the sellers. So when you begin to sell as a trader, you have to make sure that you're entering in a market that is now controlled by the side that you are joining, meaning the sellers. So what should you do in that scenario? You have to make sure that you wait for at least one confirmation, which might either be a high, for example in our case here, which is still information. We are not sure if this is indeed a high, because the price can still go up, but it seems like it is a high, it is information, and the price is entering in some kind of a minor transition. So once you wait for something like this, then whatever that is happening below here, it is a little bit safer for you to enter, because now we have a low here, and then we have a high which is not higher than the previous one. But when you enter here, we have a higher high and we still have a higher low. So we don't have a lower high or a lower low. That's why you have to wait. Now let me make another example. Where was I here? So here is another illustration. In this case, you can see that before the market broke out here, before the market gave us a breakout here, you can see that we have something interesting. We have the high, we have a high, and we have a next high. We have a low, we have the next low. We have something interesting here. This high is higher, and this one is now lower. It's now a lower high. So for the fact that we received a lower high, when the breakout comes, at least there is something that is here to back that breakout. At least you can see that the buyers here, they were now getting weaker. because they couldn't break that high. They were now getting weaker. So then when the breakout happens, a breakout of this low, it can be a signal that, okay, now the breakout has begun. However, when you see something like this, now when you see a lower high and then the market breaks out all of a sudden, you have to at least wait for some kind of a retest. You have to at least wait for some kind of a retest, which happened here. And fortunately, it happened on a very, very important level where we were expecting it to happen. I hope that is making sense. So you have to wait for that retest to come and then you enter your trade. So make sure that when you trade breakouts, don't be in a hurry to say, I'm just going to enter there immediately. In this case, we can debate about entering here as a good entry move because price was giving you a lower high. But on that scenario, which I pointed earlier here, you have to make sure that at least wait for something to be lower to signal some kind of the sellers coming in. So here there wasn't any signal that the sellers were coming in. The signal came with this wave, and this is the wave which maybe that trader which was illustrating with entered, which is something wrong. You have to make sure that these act as some kind of a signal or a confirmation, not an entry, and then an entry is gonna come in the future. I hope that is making sense. So let me just leave it here, guys. Thank you for watching.